everyone. Welcome to FinTech Sandbox 6th and final event for this week. We hope you were able to tune in to some of our other incredible sessions this week, from Demo Day, including the great fireside chat with Mike Keneally and Mike Fanning, or the DeFi discussion with Anders Brownworth and Steve Kakinas, or last night's really interesting payments talk with David Jagan and Mike Massaro. I'm Kelly Fryer, Executive Director of FinTech Sandbox. In our session today, we'll be talking about current efforts within FinTech that are setting us up for an even more vibrant financial services sector of the future. We have such a powerhouse group of experts to share their insights today, and I'm really excited to get their perspective on these topics. I'm going to get the conversation going with some questions of my own, but then we'll switch it over to your questions. So put anything you'd like our panelists to weigh in on in the Q&A box on your screen. There's also a chat box. Feel free to introduce yourself, comment on the discussion. Just be sure to put your questions in the Q&A box so that we can see them. With that, let's go ahead and do a round of introductions. Hannah, do you want to kick us off?
Sure. Hi, my name is Hannah Arnold. I'm an investor with F Prime Capital, which is an early stage venture firm based in Boston, but with offices and partners around the world investing in early stage technology and healthcare. Our particular fund in Boston is very, very focused on fintech. We invest across the entire fintech ecosystem at the earliest stages through to when startups have really proven their product market fit and are ready to scale. And really proud of the Boston portfolio we have too, with companies like Toast and Flywire and Kensho and many others. So thank you so much for having me.
Awesome. Tim?
Yeah, hi everybody. So I'm Tim Flacke. I'm the co-founder and executive director of Commonwealth. Commonwealth is a national nonprofit, and our focus, our mission, is financial security and opportunity for financially vulnerable people. So really low, moderate income people. And what we bring to that is innovation and influence. So we look to devise product ideas and sometimes public policies that we think can make it possible for more working families, working poor families, to build some financial security. And in that work, really since our beginning, we've focused on technology and work a lot with fintechs. And the second side of our focus is when we have ideas that we feel have proven themselves, our pathway to scale impact is to work with the market and sometimes the public sector to get good proven ideas into the hands of families who need them. So super excited for the conversation today.
Great. And Mo?
Hey everyone, thanks Kelly, and I'm happy to be here with everyone. So I'm Mohammed. I head up FinTech and HealthTech partnerships at MassMutual. I've been with MassMutual for the past 12 years and have held several leadership positions in both technology and our business areas. Prior to MassMutual, I founded and led a successful startup around the .com era. And as they say, once you're an entrepreneur, you're always an entrepreneur. So I've had the distinct pleasure and opportunity to work very closely with members of the Boston FinTech ecosystem over the last 3 years or so, including serving as the board chair for the Mass Challenge FinTech Advisory Board, of which MassMutual is a founding member of. I've also had the opportunity to be heavily engaged in helping build out, our FinTech ecosystem in Massachusetts, partnering with key leaders throughout the ecosystem. And when we think about MassMutual and when we think about really what we're doing, I'm very happy to be part of such a company with the culture that we have, where we're really focused on helping other people out through a lot of community responsibility activities that we have. And I really look forward to having this the dialogue today with the group.
Same. Thanks everyone for joining us today. So this year, more than ever, really has put a spotlight on some major gaps in current financial services. Inclusive finance, which as in quality and affordable financial products accessible to all, has especially been at the forefront. FinTech Sandbox really sees inclusive finance and sustainable finance as these key pillars for the future of FinTech. So I'm curious to hear from our speakers, what areas of inclusive finance are you most excited about right now? And what are the big bets in this space? Tim, why don't you go first, since Commonwealth is so directly involved in financial inclusion already?
Oh, fantastic. Yeah, there are two that I want to talk about that we are really excited about. One is we have this really large asset in this country, which is this well-developed retirement savings system. It's baked into our national consciousness. It's codified in law. There's a robust industry. But the reality increasingly is many people are just not thinking about long-term retirement. That feels, almost like a cruel joke for some households, especially in this year. And so the thing that we're very excited about is how to make that large system be relevant and more relevant to people who live their financial lives much more in the financial present. And what that looks like concretely is adding short-term liquid savings as a feature of the retirement system. So we see enormous impact opportunity. And actually one specific piece that we're very focused on is, I think probably many who are on this webinar are familiar with the impact that automatic enrollment has had on retirement savings rates. We want to see if that same mechanism of defaulting people into savings can work for shorter term liquid savings. And just in the past month or so, we have received regulatory clarity from the Consumer Financial Protection Bureau about a piece of how to do that. And we have a new, it's basically a safe harbor guidance from the Bureau. So we're very interested in looking for fintechs and plan sponsors and record keepers who would like to test that out with us. And you can learn more at buildcommonwealth.org/autosave. So that's one area we see enormous potential because to this idea of sustainability, there already is a robust infrastructure that we'd like to see extended to more people who really need to participate in it. And then the second one, which will feel very different, is, we've all read about and I think understand the role that artificial intelligence and machine learning is playing in really changing the financial landscape, changing the economy. But we have seen, in our experience, very little attention on how AI intersects with low moderate income households specifically. So we've just started a new project with support from JP Chase to take 2 years and really bore into that. And that's just super exciting to think about what can we do if we start with the potential of AI, the potential of fintech, and a laser focus on LMI households, understand their perceptions, their needs, their aspirations, and their concerns related to artificial intelligence, and then experiment with fintechs in how to make use of those insights. So very excited about that and also looking for interested partners.
Great, thanks for sharing this. Mohammed, what about from your perspective?
Yeah, look, I agree with the comments Tim made, and I would just add that one thing that, and I'm sure everyone is kind of seeing this, but so I may be stating the obvious, but I think it's important to just stress around, when we think about inclusive finance and we think about how sort of the acceleration of digital is probably helping move that along. That's something that I think we're going to continue to see. And so with more access to digital tools and people becoming comfortable learning about products and services online, what we're seeing is a continued shift in really how consumers are purchasing products. And MassMutual, we recognize, given our very diverse customer base with very different needs, that we need to be able to engage our customers on their terms, whether that's in person, online, at the workplace, or over the phone. One of the things we've been doing over the last several years, even before the pandemic, is this digital evolution or digital journey. And so we've been investing heavily in that. And we believe that's going to continue to play a critical part in how we're able to respond to our customers' needs, especially during this time, but just as we kind of look forward into the future. And so when you asked about big bets, Kelly, we believe that by building a complete end-to-end digital experience for our new life insurance customers, and having that be something that's extremely quick, cheaper, and more transparent in terms of the products and services that are being offered, we think that's going to be a game changer. So that's really what our big bet is.
Yes, yeah, I think you're both absolutely right in that it's catching the technology and some of the solutions up to current market needs and current trends that customers care about, and to get it right into the hands of them in the present day. Hannah, how does a venture capital fund think about moving towards investing in more inclusive finance solutions, especially when it may not match your current thesis?
Yeah, I think one of the things that's so great about investing in this sector, all kinds of technical advancements in finance, whether that's automating manual processes or removing human intervention or making smarter decisions in underwriting. All of those efficiency improvements reduce the overhead required to deliver the same product, which makes it possible for startups to operate earning lower revenue per customer. So fundamentally, that means that as we invest in technology and financial services, as we automate more and more of the financial back office, firms can service lower and lower account balances without making up the difference in fees and predatory practices and all the things that have caused people to give financial services a wary eye in the past. So I think that's a very real benefit of fintech as a sector, that there are so many great companies that are expanding access, even if making money is their first position priority. I can think of Chime is a really good example of a company that's now got a $14.5 billion valuation, a really large company. And they are no fee, no minimum balance, designed very intentionally to offer an alternative, a better alternative for the people that were most impacted by bank fees. So, it's I think not a distraction, inclusive finance. It's endemic in investing in fintech, that you can create a huge company by better serving previously underserved individuals. So there's a lot of positive movement, and I do truly find that fintech founders, more often than not, have positive social impact as an important motivator. And you see all kinds of startups that are experimenting with new business models, whether it's free savings accounts or, this auto-save feature that you just mentioned, Tim, would be a really valuable feature for, valuable in all senses of the word. Rent deferral products, debt management, all of these, it's what makes this an awesome sector to work in, that there are so many opportunities to do well by doing good when you align incentives in the right way.
Yeah, I think you're absolutely right that we're going to start seeing, in some ways, more startups that are focused on the financial inclusion space, just because I think more and more founders are just really focused on these kind of personal solutions to solve their own problems. Go ahead, Hannah.
I guess that's when you say that, it brings up another point, that if I had one precautionary thought to offer, I do think it's important to recognize that there's a natural tension, between VC, wanting to build a huge, valuable company and wanting to morally, ethically, correctly serve our most vulnerable population. So, while I do really strongly believe that there are opportunities out there to build big businesses by offering better, more affordable products for previously underserved populations, there are probably just as many fintech companies that started out with a mission in mind and in the end started to look just as exploitative as the companies they set out to disrupt. So I do think funders and founders alike ought to be cautious of conflating inclusive finance with having low-income customers. You need to be much more intentional about that. Just a thought.
That's a really, really great point. Tim, what about from more of a general financial services perspective? How does a company start kind of shifting their strategy to focus more on inclusive finance and demographics that may not be their historical customer base?
Yeah, gosh, I have several thoughts on this one, but I just want to start by saying, underscoring really what Hannah said, that anything that brings down costs across the industry is a net positive. I guess when I say that out loud, that seems blindingly obvious, but maybe I'll offer that as a note of inspiration, because the collective work of the people on this call is doing that, and that has an effect. So if that's the easy message, I guess the slightly more complex message, which I'll offer, is one way to look at the events of this year is that what we expect, what sort of table stakes to operate in the economy may be shifting. And so the framework of am I being inclusive or not, or am I serving underserved or not, has a place and is important. Another way to look at it is that if you occupy an important position in the economy and operate with a certain amount of public license to do that, then it's incumbent on you to answer the question, how am I serving the majority of this country? And let's be clear, depending on your data source, right, up to 78% of us report that we're living paycheck to paycheck. So this is not about them, right? This is about us. And so I just, a little bit to be provocative, but I also genuinely believe this, the divide between quote unquote doing good and doing well is going to collapse more and more. And we see that in consumer research with millennials. This is not a new thought. So I just want to pose the question, are we well served by always seeing these as two separate issues? And then maybe to go a click on the darker side, I think one way to think about that from an investor perspective is as part of your diligence process. This may seem like a little bit of a leap, but I'm going to go out there and say that probably most large firms, much less startups, didn't start 2020 anticipating that they were going to be accountable for where they stood on issues of systemic racism. And yet, here we are. And I think you can make a pretty good case that that was a existential issue, or certainly a very top priority for a lot of the firms that had to come to a position. Well, who's to say what's next? But the overwhelming evidence of financial insecurity and financial anxiety made many, many times worse by 2020 suggests that, all firms who operate in personal financial services or in the financial services industry writ large should be thinking about what's their position on what role they play around making a more secure world possible for again, the majority of Americans.
Yep, 100% agree with you there. Mohammed, anything to add from the MassMutual perspective?
Yeah, I would just, I completely agree with what Hannah and Tim were mentioning. I mean, the way I think about this topic and from a MassMutual, but just even from a personal perspective is that, and I think Hannah touched on this a little bit, right? It's important on how we define financial inclusiveness, because I think folks you can define it as one way where it's okay, are we serving maybe the underserved, or is it bigger than that? And I think, bottom line is just the common denominator is whether you're a fintech company helping provide, or startup helping provide potential solutions, or you're a big, large financial company like MassMutual, we need to be flexible, and we need to understand really what the needs are, right? At times you may have to diversify your products and services. And I'll give you an example of that. We launched, I'm sure a lot of folks, and we launched Haven Life, which is essentially a D2C sort of business model. One of the reasons why we did that was because we recognized that there was this sort of segment of customers that we really weren't tapping into, and we wanted to be able to provide a seamless and simple way to purchase life insurance. We've been pretty successful in that space, but these are the kind of things that we have to take a look at. Sometimes you got to take some risks. It may not be the standard thing that you're doing, but you got to try it out, because ultimately, if you don't try it out, then you're never really going to be sure of what that end result's going to be. So I think it's just important to be open-minded around this topic.
Yeah, I think you bring up a really great point around, we as an industry really kind of need to decide on a definition of what inclusive finance really means and what that really incorporates, because it can be such a broad umbrella, and then people are talking about such specific aspects of it. So really good point there. Going back a little bit to the VC perspective, I think one big question on founders' minds is sometimes, are investors considering financial inclusion products in the same way as other fintech products? And so, Hannah, I'm curious, how do you combat some of the bias that just kind of naturally occurs in the investment decision process?
Yeah, it's a really important and hard question that I think a lot of the venture industry is grappling with right now. Bias is just absolutely endemic in VC in so many ways. First, there's all kinds of qualitative judgments that go into an investment decision in the early stages, because there is often so little data on which to work. So judging whether a team is great or can be great is a non-quantitative exercise that is just wide open for biases and prejudices to creep in. And then, so much of deal hunting lends itself to chasing heat or pattern matching. Founders that recently left Stripe or Plaid, founders that have had successful exits, founders that certain firms funded last time around, all of which just exacerbates the network effects to the exclusion of underrepresented groups and just any kind of atypical founder. So even the term pattern matching, you don't want to match to a pattern, the same pattern that got us here. So there are some inherent things in the way that VCs do business that are just rife for getting us to where we are, where the numbers are just so abysmal. So it's a really hard problem to address at the system level. And, I don't believe there's a magic tool to fix bias in the VC investment process, because in many ways it's a mirror of bias in society. The only answer that I think I have, and that recommendations from more knowledgeable people would suggest is right, is personal and firm level accountability. And it's a long, hard road. But we start with tracking, and then intentionality about fixing. Track the founders that come into your funnel, the founders that progress through your funnel, the makeup of the funds that you spend your time with, all of these things that make up a VC network, and spot the problems and root them out. Change KPIs, change processes, experiment, work hard to root out bias from your decision making, because we know it's right, but it's also really bad for returns. So I really don't have any answers here, but it's certainly kind of at the top of mind for many VC firms today. Like, how do we fix this industry, which is operating on so many core principles that just naturally exclude people. So it's a really, really tough problem.
Tim, are you seeing solutions or efforts to remove bias in other historically biased financial products, maybe lending, underwriting, mortgages, things like that?
Gosh, that's an enormous question, to be honest. I don't really feel qualified to answer it. So let me offer a little bit less grandiose thought. I listened to Hannah, and I feel like there's a framework in my mind. One side of this framework is, who's the customer, what's the business? And I think for very understandable and legitimate reasons, there are businesses, for example, the difference between back office and consumer facing, where you might very naturally say, oh, this isn't a conversation about me. It doesn't really come up here. But that's why I wanted to get to the second thing, which, doesn't feel like it's up to the size of the problem, but I wouldn't underestimate the role of the people who hold the capital in asking questions. And what questions do you ask? Who is your target customer? Why? What were your assumptions behind that? Who have you talked to as you tested your product, and why? How did you build your executive team, and why? And I don't even have all of them, but my guess is the people who do this for a living are much more skilled at asking really insightful questions. That's probably weak tea in terms of being able to really solve the problem, but that feels like something that could start tomorrow. Just come up with 3 or 4 or 5 questions that you habitually ask every founder. What a difference that would make over time in terms of the sort of things that the people who sit across the desk from you and are looking for capital assume they need to have thought about. That would be a step in the right direction.
Yeah, I like that. Very actionable.
Yeah. I think what's very clear, and this is in venture and elsewhere in the financial services industry, is without intentionality, without talking about these things and prioritizing them as an organization, you are destined to rebuild the same systems of harm as before, to keep repeating the same mistakes, to keep rebuilding your teams that look the same. I think even just this week, there was an article in the New York Times this morning about mortgage lending algorithms, which was great in some ways. Study finding that fintech algorithms discriminate 40% less, but not 100% less. Still charging Black and Hispanic borrowers higher interest rates than whites. And Twitter user discovers photo thumbnail selection algorithm in Twitter repeatedly selects lighter-skinned individuals over darker-skinned individuals. And then we have the Wells Fargo CEO using the same tired trope that's been used 100 times before, that there's a pipeline problem for Black talent. So I think what's really clear is that if you do nothing, if you don't actively prioritize, if you don't actively test for bias, if you don't make it an organizational priority to remove, the de facto answer is you will continue to rebuild, continue to recreate in the same ways. And I just, I think the questions you raised, Tim, are really good points. The intentionality, continuing to bring these issues up to the surface, I do believe is just really, really important to us getting to a better place than we're at today.
Yeah, I agree. Question, and intentionality are key here. Switching gears a bit, we've been talking a lot about, I think, accessibility really from the kind of consumer perspective, but it's also important to think about it from the entrepreneur side as well. So for early stage fintech founders, I mean, they struggle with access in general, whether it's access to capital, access to data, access to top talent. Where do you think fintech founders are struggling the most today? And how is the financial services industry really primed to help make entrepreneurship more accessible going forward? Mo, you were a startup founder yourself, so why don't you take the first one on this?
Yeah, Kelly, no, this hits home, and it's like deja vu 20 years ago for me. So, you know, I mean, yeah, like I'll just a little trip down memory lane. About 20 years ago, I was at UMass Amherst doing my engineering degree, and you know, a couple of friends of mine, you know, we came up with a great idea. It was a .com era. Everybody wanted a website, you know, e-commerce, e-trade, all this stuff just started, and we got in at the right time. I will tell you though, and this actually ties a little bit into the previous conversation, so I'll tie them together. You know, two of my partners, one of them, they were both international students. One of them was from China, the other one was from India. And, you know, I'm born in New Jersey, but I'm like the United Nations if you take a look at my background. So, you know, we were, you know, I would say in the eyes of many, probably just, you know, different, I guess maybe is the best way to put it. But it was difficult in the sense of just kind of tying back the other topic to, you know, we kind of pooled all of our funds to get this thing off the ground. You know, the very first one when I think about challenges is that topic around access to capital, and making sure that these, especially for an early stage startup, it could just be it could be, again, maybe it's you're talking to people who may not want to invest in you because you're not maybe the typical, you know, persona that people would want to invest in. But then there's also the other aspect of if you don't have a proven product or services, right? It's usually it's a lot of people kind of tend to shy away from investing. So usually what happens is you have early stage startups that are bootstrapped. They're funded by friends and family, or themselves, obviously. And that can, quite frankly, you know, just either slow down the progress and the innovation that startup has, or could kill them, quite frankly, right? It could just end sort of the whole idea that they have if they're not able to get the funds they need to progress. In addition to that, sometimes it becomes a challenge hiring key talent that you need, and this further kind of, you know, exacerbates the problem. The other one is partnership opportunities. So, you know, a lot of large corporations, they tend to be hesitant to work with small startups. And especially if you don't have referrals or some customers kind of already under your belt, they'll probably be a little hesitant to work with early stage startups. And for a lot of these early stage startups, really the first thing for them is who's that first client? Who's going to take that risk to partner with them? And so that culture and that mindset has to change in terms of being able to think about some of these early stage startups in a different light, and kind of take a little bit of that risk and go on that journey with them. I don't like to use the word risk. I like to use, let's go on this journey together and see where we land. And then the other one is, say you get in the door and you're actually engaged with a large corporation. You know, some of that corporate startup readiness, it isn't there. And you know, the corporations have never worked with small startups. They may be used to working with, you know, some of the big companies out there, from, let's just say it's technology as an example. And so that causes challenges because it's kind of like, you know, it takes two to tango. So what's that relationship? What's that engagement model? That needs to be clearly defined. And so these are all just different things. You know, we can think about, you know, contracting. You know, usually we have 300 pages of contracts that we'll go and ask a startup who has no attorneys to help them to go through. They don't have time to look through all of that. So there's just a range of things that I think when you boil down to the three, to me, it's access to capital, you know, how to get that first big client, that first partnership opportunity. And then once you're in there, how do you engage with them and what's kind of the norm? So, you know, those would be the big challenges that I know I had when I had my startup. And I still consistently see, and just very recently we ran a survey as part of the FinTech working group, sent it out to a little over 100 startups, I believe, and these were the three themes that kept coming up. So you know, it's I think 20 years later, it's the same problem.
I'm sure 20 years from now, it might still be a problem. You bring up a really interesting point, I think, on the partnership side as well, where it's these large institutions don't want to be the first customer, but at the same point, the startup needs somebody to be their first customer, and it becomes this catch-22 where they're just trying to get a big enterprise to sign on board, and nobody quite wants to be that first one. Tim, what about from your perspective?
It's hard to follow Mohammed because he's got firsthand, testimonial and experience. But I guess, one thing that we come across a lot, partly because we are a mission-driven not-for-profit, but we meet a number of entrepreneurs who are, very talented and very passionate, and they feel torn between what they want to do and what they can get financing for. And I guess I wonder if this represents something of an opportunity that the first investor who figures out how to work with founders like that, who are deeply passionate, have an idea, but really feel like they have to sort of check their soul or sell their soul or something in order to get the money they need. And there's not a lot of space to say that, as you would imagine. I wonder if there is an opportunity there to figure out how to work with founders like that in a way that the marketplace really doesn't right now. But that feeling of just being caught between really two options of aligning your business on what has the highest near-term growth potential and a certain set of funders who will rally behind that, and perhaps restructuring as a not-for-profit or something, which it doesn't feel like there's a lot of middle ground between those two. The second thing, I just this week read a piece that really struck me by a fabulous woman named Martha Blow, who is now Senior VP of Social Impact, I think, at MasterCard. Just a very personal testimonial. This is a woman who was a senior executive at Capital One, was a senior part of the leadership at the Consumer Financial Protection Bureau, who has the most gold-plated credentials in education, and set out to start a secured credit card company. And her firsthand story of trying to secure capital and resources for her business and is pretty powerful. And again, I just offer that because it's hard to read that and not say, wow, there was an opportunity missed here, and why was that? From the point of view of investors, and also from the point of view of social impact. So if you Google Martha Blow, it's a long essay. I would encourage you to check it out.
Yeah, I've actually heard Marla tell that story before, and it's fascinating. So definitely check out that blog post. And I mean, the stark reality is it's not an uncommon tale, right? Having to kind of convince investors and potential partners that something so outside of their norm is an everyday reality for millions of people, is something that I think a lot of founders are struggling with, of how do I make this story resonate with somebody who's just never experienced it. So like I said in the beginning, this year has obviously been unlike any other, especially when it comes to financial needs. How do you think COVID-19 has changed financial services or FinTech? And what do you think are the trends or the new tech that we'll see pop up over the next few months, a year, because of it? Hannah?
Yeah, if you take a really long-term view, I think the most, and Mohammed touched on this a little bit already, but I do think the most lasting impact will be just the huge acceleration in the move towards digital financial services. We definitely all think of payments, and the internet native payments companies like Stripe or PayPal are definitely benefiting from our sudden shift to all online lives. You think of Instacart doubled, maybe up by 200%, and that's a Stripe customer. And Grubhub, Uber Eats, these are all, PayPal, Stripe, Adyen customers, and they're seeing incredible growth. So those companies are definitely going to benefit. But I think there's also a fun and interesting realm of, how many people will realize they don't really need to go into a bank branch, and what downstream effects will that have on the rest of the FinTech ecosystem? And how many people will close a mortgage digitally and realize they never want to go back to the old way? I just think there's all kinds of ways the crisis is forcing trial of online financial products that people may have been otherwise hesitant to try. And we're all going to want to go back to doing things like this in person, but why would you want to go back to more manual financial services? So I think if we look back in 5 years, it will be mostly an accelerant to trends that were already underway. And then, the only other thing, I think you mentioned this as well, Kelly, but I do hope we see a cohort of startups putting impact back in first position in their mission statements. I've been interacted with so many people this summer that are taking a step back and asking, what am I doing to help improve this world? Am I using my energy in the most effective way? And I do really believe that we'll see that mindset reset, waterfall through society in lots of ways, and certainly hope to keep seeing it in FinTech too.
Yeah. Mohammed?
Yeah, no, everything Hannah said, and I would just add on a little bit more around two things. One, and this is, again, kind of personal to me. When you take a look at everything that's going on digitally, and I think we're in this, what I'm calling this digital era now at this point. Personally, I have 3 kids at home who are doing all classes online. And I think the next generation, my kids, the kids that there's going to be a lot of, I would say, new things and innovation that's going to come out as it relates to the amount of, I would say, online activity and sort of accessibility that people are having. But on that note, on the whole topic of accessibility, I think the other thing that's also come out of all of this is that when we go back to kind of like the underserved, there's a lot of people who don't have laptops at home or who don't have internet access and who can't actually, log in for their school classes. And that's also coming up. So kind of going back to that whole community responsibility angle that Hannah was saying, which is super important. We are seeing some companies step up, right, where they're either providing subsidized or free internet coverage or free laptop. And I think it's going to be, we're in a fundamentally different and completely a game-changing time, I think, in terms of really for everyone. And some people may realize that, some people may not. And I think, a lot of people think, are we, eventually we'll go back to normal. The question is, what is that new normal going to be? Kind of hitting on what Hannah said. But I think what's going to happen is, because of the situation that we're in, and I think of it as like this perfect storm that's going on right now, and it's not really perfect, so I don't mean it to be as positive. But what I think you'll see is that because of the pandemic, the way that we operate and we do business today and the way that we're interacting with folks, it's going to fundamentally change. And what I believe is going to happen, we're going to see, maybe not in the next year or two, but sometime down the line, the next Google, Facebook, or Amazon come up, which is going to be like, why didn't I think of that? And that's where it goes back to the startups to think about that. What can you do from a community impact perspective, but also how can you help given the situation that's going on? So if there was a call to action I had for the startups who may be listening to this, or quite frankly, any innovator in there, you could be in a corporate company or where else, let's think about what we can do better to kind of help others who are in need.
Tim, what about you how do you see COVID impacting FinTech?
Yeah, I think everything that's been said seems spot on to me. I would just add that, specifically contactless payments would be an example of new technology. And slightly more broadly, I guess a frame that I would offer to think about this is a behavior change opportunity. We've done a lot of work over the years thinking about ways to make financial services and savings opportunities engaging and fun for people. And what that taught us is there's a world of difference between extrinsic motivation and intrinsic motivation. And if you are for various reasons want somebody to try to do something new, if they sense that that's your agenda, it is a much, much steeper hill to climb. And the moment that that's their own agenda for themselves, all you're doing is facilitating. And I'm not happy that this is what happened this year, but I do think people feel they're very motivated in many cases not to be at risk. And that is a really an asset for us to think about as we both design products and services and as we communicate and market them. So that was one thing. The second thing I wanted to say is it so happens that a year ago, so pre-COVID, really following on the heels of the government shutdown, we did some national research to try and understand how much does the average American worry about financial security. I don't know if you all remember, but it was early 2019 and government workers lost a paycheck or two. And there were a lot of stories in the news about how People were just not ready for that, and they were out there, cashing in retirement plans and borrowing on very expensive terms. And here's the thing. So in 2019, 81% of working adults between 18 and 65 told us that financial insecurity was a major concern. That's like almost too high a finding to be credible. And that was before 2020. And equally interesting, maybe even more interesting, we then said, well, really what's going on here? What's the cause? And significant majority said, this is about what the financial services industry, this is about what my employer, this is about what government can do. And I think it's sort of a sea change moment I see real parallels to the conversation about racial justice in the sense that, probably much more quickly than I would have anticipated, a lot of that conversation nationally is about systemic change, this idea that we can't fix this just on the basis of what we do as individuals. That's important and that has to be part of the conversation, but it's not enough. And that seems to be where a large number of Americans are in their personal finances. Yeah, I get it. It's on me. I got to make good choices. And I could do all that right, and I'm still not going to get there. And so from the point of view of our community, I think that represents an opportunity to, first of all, see that and figure out in a way that's not tacky to sort of say, I get it. And secondly, to try to be that system that can make it possible for people to, whatever your issue is, build some basic savings, build some basic financial security, have a realistic pathway to kind of strengthen your household balance sheet over time. I think people are crying out for solutions, and that represents an opportunity.
Yeah. Let's switch gears a bit. We have a ton of questions, so I'm going to start working our way through these audience questions. Starting first with, a lot of financial products are tied to employers, and I'm seeing more and more startups, to be honest, try and go the employer solution route as their customer base. Things, whether it be retirement savings, disability insurance, health insurance. Should we really think about divorcing those financial products from our employment and separating them out?
I can make a couple comments on that. First, I think we are actually starting to see some of that begin to happen. There's been legislation recently proposing small businesses be able to contribute to financial, retirement products and otherwise in a tax deductible fashion. The CEO of Uber has himself advocated for being legislated around this topic. So, the idea of portable benefits, having maybe not your benefits be tied to one employer, but getting some contribution from many different employers, that type of change is already starting to happen a little bit. The one benefit there is to, employer-based products is I think a lot about some of the comments Tim just made of, FinTech can only go so far. There's only so much that we can really influence about a person's individual financial situation. And at the end of the day, lending someone $20 for 3 days is not going to change whether they are living on the edge. That's an employment problem. And there is actually a 1 + 1 = 3 in some of these employer provided systems. So it's a really interesting and good question, and I think we are starting to see some of that decoupling start to happen already, but it's just one I would approach with caution, because there are genuine benefits to having your employer pay for a financial benefit product for you, if they're not going to raise minimum wage on their own. So it's just one I would approach with caution.
And I would just add to what Hannah said. Completely agree. The reality is that ultimately, the way I think about this is we need to have options. I think this kind of comes back to maybe an earlier point or question that came up where I think it's important that employers do offer benefits, and there are usually advantageous situations for the employee to have that, and then there's also supplemental products that folks can purchase which can complement what the employer is offering. So I think we just need to be flexible more than anything else. It kind of goes back to being able to just understand different consumers' needs and then balancing sort of what product suites or services are available for them. So whether that's a fintech solving that, or whether that's a financial services company, a large financial services company solving that. I mean, I think there's pros and cons on both, and I would echo what Hannah said. We just to kind of be careful as you think about separating those two out.
Yeah. Because of various historical events, I'll say, there's a lot of distrust between consumers and their banks. They just don't trust their banks and sometimes don't put as much money in them as maybe they should be. How do we as an industry get everyday people to trust their banks more? Tim?
Well, just a few thoughts on that. I think it does start with seeing people, seeing all people and really seeing their financial reality. I don't think that's enough, but I really can't stomach another older, white, impossibly handsome couple in a hammock on a beach with a sunset. That is not the country that most of us live in. So that's point one. But I think the more substantive point is, people are pretty sophisticated and they may not have the language for it, but if they sense that this is a zero-sum situation where you benefit by me not benefiting, you're never going to earn that trust. And where you can legitimately present a business model that says our incentives are aligned, like that's gold. And again, I'm not suggesting people walk around with all this worked out in their head, but on some very instinctive level, that's what they're sniffing around for. It's like, what are you up to? What's your motive? So I would encourage us to kind of keep that as the North Star, and it's consistent with all the things we read about and experience about the appetite for transparency. And in the most extreme case, we know of fintechs, as all of you do too, who have used a voluntary payment model. That's not going to be right in every case, but it sort of is the epitome of this. We're so confident that we are delivering value for you that we will place our revenue in your hands. So it's an interesting thing to keep in mind when the conversation comes to trust.
Yeah, I think a lot of folks are looking for, that their banks get them and that their banks are thinking like them, and they're not showcasing that right now. One question is, getting to pitch your startup to a VC is still highly driven by access and connections, like you mentioned, Hannah. Are there other ideas that startups should be trying to get their pitches out there more to get better access to angel and venture investors?
Yeah, that's definitely a really tough one. There are all kinds of different initiatives, too many to name, and definitely we've seen an increase in many of those this summer. People that are willing to make warm intros, people that are willing to read cold emails. I think we are all consciously making an effort to do more of that and participate more in that. It's an industry that should not be based on warm introduction, and I hope that these initiatives take off. Even some of them are. DocSend created their own initiative, for example, to provide warm introductions, and there are always a handful of startups that are working on double opt-in intros that aren't based on warm introduction. So, there's a lot of efforts in play. I hope more of them continue to kind of grow and be successful. I will say also the other piece that we're definitely seeing right now, and probably in response to how poorly venture capital has served certain individuals, is all kinds of alternatives to venture capital fundraising. And some of that is what we've all heard of before, debt, grants, bootstrapping, but that also includes new crowdfunding platforms, which I've heard of many founders who are underappreciated, represented, undervalued, that go to these crowdfunding sources and get the capital they need for that first round. There's also new startups that are launching, like Pipe, who will take your SaaS data and fund you on that data alone. So removing any elements of bias about the founding team, which is really valuable. And then, increasingly kind of independent fundraising bodies that are seeking to remove some of those qualitative decision metrics that I mentioned before that do create bias. So at the end of the day, competition is good. We're happy for it. The more there are alternatives available, the more VCs are going to have to work hard to make sure that they're not missing out on the best opportunities because of bias. But as of today, there are so many different kind of get warm intro networks, but all still seeking scale. So I recognize it's a really, really tough challenge.
Yeah. We have a couple interesting, I think, kind of thought-provoking questions around, let's see, would allowing the Postal Service to offer basic banking products solve the problem of banking deserts and offer greater access to fairly priced products to the unbanked? And I'll kind of tie that into the next question, which is also, is it still too early for the industry to start promoting or thinking about notions of minimum basic income? No, those are two big questions. Mo, do you have any thoughts on it?
I'm curious to see what Tim says.
Tim?
Well, so the postal banking thing is charged. I guess I'll dodge the question a little bit and say what I would love to see. What I would love to see is a national consensus that it is a public interest to have everybody connected to the financial system. And there are analogies in electrification, if you want to go back that far. And if we could get that, then I would love to see a robust conversation about, is it the post office? Is it the Treasury Department? Is it something else? And I'm not dodging because, I mean, the truth is, like, at some level, that is an operational question. Can the post office deliver on that promise? If they can't, which I think is a fair question to ask, then we will have taken a step backwards if we go through a whole chapter of trying to figure that out. So let's start with a consensus about what we're trying to achieve. If we could get that solidified in the public imagination and in this day and age, it seems unlikely, but have some political consensus around it. And by the way, I think you can make the case that government itself would benefit considerably if all of us were connected to the financial system, right? Many, particularly lower income households, the counterparty for their financial transactions is more likely to be government. And we have an amazing Frankenstein system in a lot of cases to make that happen, which is a whole separate issue. Anyway, I'm rambling, but I think that's the reframe that I would offer on that.
Yeah, that's a really great point. Hannah, are you about to jump in?
Well, it is, yeah, they're both charged questions for sure. I mean, on universal basic income, I think it highlights for me, again, this point we've made a couple of times, which is FinTech is not the answer to everything. Like, some of these problems are systemic. They require government intervention or some other intervention, and that to me is an example of, if a FinTech steps out to launch a minimum basic income product for the United States, good luck to them. I think that's a really, really big challenge. I think some problems are too big to be solved by, move fast, break things, tech disruption. And that's one I would put in that camp.
That's fair. We're coming down to the last few minutes of the session, and I want to give each of our panelists really a chance to kind of give some final thoughts. So let's do 5-year predictions. What will be the big FinTech trend come 2025? Mo, you want to kick us off?
Yeah, sure. Look, I would just say that I think the next 5 to 10 years are going to be extremely interesting. I think there's a ton of opportunity that's ahead of us. And especially here in Massachusetts, I'll talk about that at the end here. There's, I think, some interesting trends and insights that's going to be published soon that, we're going to be taking a look at. But just specifically, so I think a lot of people have heard about 5G. If you're driving around in your car, you'll see now that your cell phone provider says 5G. And just to be clear, that's really not the true definition of 5G. This is where the tech geek of me comes into play. So when what I would say the true rollout of 5G actually happens, it's going to further accelerate us into this whole digital era, and specifically around AI. Again, I think a lot of us, including myself, have sort of the textbook definition of what we see with AI today, whether it's maybe chatbots or other things like that. But I don't think we've really truly understood how powerful AI is going to be. but you got to have sort of the infrastructure in place. So true 5G as it's defined, and I won't go into that definition now, I think there's going to be some significant advancements there. The other one is around just data. Data, continues to be extremely important. At MassMutual, we've invested millions of dollars in data science and trying to really take a close look at how we can effectively leverage data to drive real-time business decisions. And that's going to continue. I think that's going to grow and get accelerated as well. The other one, which is not so sexy, but it is important to talk about, is just the fact that the way we operate and run all of our businesses is going to be extremely important, right? So the unit cost around that. And so a lot of big companies, just like MassMutual, we have some very old legacy platforms. And this is where I think, from a fintech perspective, there are some innovative solutions and ideas that are coming out there that I think are going to be, game changing. So just to kind of close it here, the one thing that I also think is going to happen is that we're going to see a uptick in what I would say diverse fintechs. One of the things that we've been doing, as I mentioned, this fintech working group over the course of the last several months is really taking a look into the ecosystem and understanding how we can make Boston and Massachusetts the #1 fintech hub. And that report's going to get published soon. And when that does, we're going to start to establish some key activities around really executing on that. So I'm very optimistic about the future.
Awesome. I know we're running up right on time, but Tim, Hannah, 5-year predictions?
Sure. Yeah. I mean, to be honest, from my perspective, 5 years feels like a lifetime, given how fast things have moved in the last couple. But as far as trends, I think will continue to be really important. Embedded fintech is the kind of premier fintech investment thesis at the moment, and I think that will get more and more important over time. So, bringing not just payments, but also lending, banking, all kinds of different financial products into the software platforms where people are interacting is a theme that I think we'll just see really grow in the next 5 years. And then I'm really excited too about all the various themes in bringing kind of a globalized view of finance, making it possible to interact with the same financial systems in different parts of the world, and easing the friction in between different countries. So 2 that I'm really excited about.
Tim?
Briefly, I'm not a very good future predictor, so I'll offer this instead. I think what I am certain of is that we're going to face, as individuals and as a country, a bunch of very, very high stakes decisions in the next few years. And so, probably a good use of all of our time is to think about what we see as those very high stakes decisions and which ones we can have some influence on. Because honestly, I could sit here and paint a very bright future, and on my good days, I believe in that, and I'm excited about that. And I could also paint a future where things that I think are a problem today are a lot worse 5 years from now. And that leads me back to the same point, like where are the moments where we have something to say about that? And I think one of them is coming right around the corner in the form of a very, very important election. So that's where I would leave that.
Awesome. With that, thank you to our incredible speakers for joining us today, and thanks to all of you for tuning in from your home office, aka the dining room, on a Friday afternoon. Like I mentioned at the beginning of the week during our demo day, these FinTech Talks are really just to kick off our march towards March. So as we gear up and get ready for Boston FinTech Week coming this March, our theme will be financial services for anyone, anywhere, anytime. So today's topic of inclusive and sustainable finance will be a big part of that conversation. Stay tuned and be on the lookout for more great events and speakers like you heard here today, hosted by the FinTech Sandbox team and our incredible partners. Have a safe and wonderful weekend, everyone.